Get right to it. It's the market recap. As always, it's a wild, wild day in the markets. You saw what was happening all afternoon. The rally just continues. It's a bull market, everybody. If you can't tell, then you haven't been watching. Try not. The only fade you want these days is a nice looking fade that my barber usually gives me, or that you can give yourself, like I think Brendan does, because that guy seems to cut it. But you don't cut your hair anymore? Well, it seems like Brendan, I've always thought that Brendan, like you can't possibly always have your hair done well. You must be doing it yourself. You're not going to the barber once a week or every other day. But anyways, my brother does his own fade. But that's the only fade you want. If you fade the market, do so at a key price level, do so in a weak stock, do so in something that has a catalyst. We'll get into some of that when we come to talk about the trade review, because we'll get into that for Rivian. But just shout out to everyone. Is everyone starting to come in? Here's what up, Spark Shop. And also shout out to Obi there. I see, thank you, Eliza Rader, I think. Eliza Rader in the chat there saying thank you to Obi. Want to say thanks to Obi as well for closing out the show and doing a fantastic job the last couple of days. So if we're going to go into the market review, there's one thing that stands out today. Okay, well, I know we always look at these ETFs and like what was strong. Okay, IBB, SMH had a good day. You got the Qs up, well, XLF. You had some good rallying names. Look at the bottom here. Well, if you're in USO, UNG, or TAN, otherwise known as your solar names, yeah, it sucked to be you, energy. No energy in the energy names whatsoever. Now, when I sat down and was going through my prep, it was actually the worst on the TAN ETF. And I don't care what you want to look at individually. Like Enphase caught a bid at the end of the day on Enphase, so good for that on Enphase. I want to leave that in there. We'll just pop out the daily chart on Enphase. Like it caught a little bit of a bid at the end of the day, but this has been bleeding all day long. Now, the savior for Enphase is that it actually got off the bid at 97 to close, almost retesting 100. So that's the reason TAN isn't leading the board to the downside, is the majority of those names actually managed to catch some kind of a bid. Now, it's not really smooth sailing for this ETF. Obviously, there's been some pressure on it to the downside. The trend is your friend till the end when it bends. I don't know where the bottom is going to be, and we've been talking about this for some time. We get questions about Enphase individually, and I think that just happens to be the one a lot of people are paying attention to, but this ETF has yet to show a lot of strength. Now, there is a double bottom at 40, and were it to hold at 50 and maybe get back above the $50 level, I think that could look like a bit of a reversal with a lot of room to the upside. But when you're looking for something to catch a bottom, it is much better to join a higher low or a breakout setup off the bottom instead of trying to actually catch the following knife and make the bottom. It is very difficult to do that because the stock is in a downward trend. It's like trying to short the absolute top. Let somebody else make the top and you just join underneath it. That's much better, and it's the same thing for buying dips on anything. Doesn't matter what it is. I don't know what to tell you, but this is why I don't trade natural gas, people. Unless you find a good trend, the trend just seems to want to go one way here. Another fresh low for UNG. No bottom in, okay, there's probably a bottom somewhere, but no bottom in sight recently. This has been just failing on top of failing on top of failing. Lower levels all through. It was pretty much all of energy that was weak today, but there was a good look. Biotech, very strong day, leading the charge up 1.1%. I think it's got a lot of room to go. As a matter of fact, we were talking with Michael Noss last night, and one of the things he said is he was looking into some of those other sectors that he thought had some more room to run. Now that the move is getting a little bit more broad, you've got at least another couple of points to resistance on the daily chart here for IBB. I don't have to tell you about SMH. I mean, if you watch the show, you know what's up. This is up. AMD's up. AVGO is up. Nvidia's up. What the heck? Well, I think ARM wasn't up today, but who cares? I mean, ARM's having a great last couple of months anyway. So SMH, very strong move to the upside, leading the way. The Q's coming in at almost a full %. So you did have still a broad move, but it was very much led by the top end of the tech, which was not the case in yesterday's trade. So it was a decently broad move with the exception of energy. So we're pretty happy. A bull market's a bull market, and it should be a lot of fun. That's why everybody is generally in a good mood. The great thing about a bull market as a trader is if you have a bad day trading, well, then your savings did really well and your personal account did really well. It's when you don't capitalize when the market's weak as a trader that you get kind of upset. Because then you go home and you look at your RSP or your 401k and you're like, ah, crap, should have made money on the shorts. But that's another story. Gonna jump right into it because we do have, when we get to Trader Talk, we got the man himself, Mr. Brian Shannon. It's my first time getting to chat with him on the show, filling in for Sean, so I'm pretty excited about it. Fantastic trader. Probably, like I'll tell it from my personal experience because, I mean, he's written a couple of fantastic books. Easily the best technician that I have seen in my 20 years, that I can at least say that I've been able to read what he's written and looked at some of what he's been able to impart in terms of technical analysis. You always want to learn from the best, and that's what we try to do here. In terms of trade review, I settled on Rivian today because I just felt with the way that the Rivian trade set up and the opportunity that it presented, it was the one that I wanted to cover. It doesn't always have to be about a winning trade versus a losing trade. Sometimes I want to talk about a losing trade more. I think you learn more from it. But Rivian, I still think Rivian is in a little bit of a mini breakout. However, it made the bottom off 15. You can see it breaking 18.25 here. But today was a different story. Now, caveat, 24 hours ago, remember Lucid? The CFO leaving, the Huadunk in the aftermarket, and then the follow-up at the open today. That's the context of where this started. When Lucid dropped, Rivian died. And it died off the open. It took out this $19 level and just completely flushed. Now, when you have a weak stock and you miss what is a gold setup, a breakdown, make the next trade. It doesn't matter what it is. Make the next trade. You cannot go back and find some opportunity and hope that it goes back and you go back in time or it goes back up to 19 even. That's not the way the market works. Find the next available setup, and when that setup hits, crush it. Okay, so what's the next available setup? Zoom out the chart to the 15-minute. There's my support at about 18.25 to 18.35. Look for a fade in that price area. Maybe it's not exactly at that support, but look for a fade in that area. It bounces, Rivian bounces off 18.10. If you saw the morning show, I shorted 30s. I shorted again in the high 30s, in front of that, actually about 39, out in front of that local high. That was it. Go to the next important level. If it sets up a nice curl, take the next leg to the downside. Now it bottomed at 17.75. I thought it could have got a little bit further. I trailed out when it double bottomed here. I don't know that it made sense to go into the long. At the time, I said no. Clearly, in hindsight, it was a long at that price, and there was even a scalp off the same level in the afternoon. There are going to be days where you see a gold setup or maybe a bias on a stock or whatever it might be, and at 9:30, you flat out miss it, but you know you want to be in the move. All you can do is look for a setup that makes sense after the fact. It might not be the same price. Don't just rush to short the stock in that situation. Look for a reason and a setup that you will like. Support to resistance is the most basic one for me. And in a trending stock, in a heavily trending stock, it's going to be an easy place to start with. That's why I wanted to get to this one for Rivian. The other thing, just because I have a couple of minutes here, I think, and let me know, Fabian, when we have Brian, because I don't want to keep the man waiting, to be sure. But there were other opportunities, and this is giving me time to go over Alphabet to be sure. Alphabet was not a difficult trade because it was the one that I was looking for. Pretty much, it was clean. Sometimes you're going to get a very clean move, and you have to take advantage of it when it happens. So just a couple of things. We closed at the 133 level, support 133, rejection fall at 133. And then you have like a tight reduction at 133 once again. Now I'm going to go to a 3-minute chart just to give you a better look here. Let me leave the daily because I like my dailies. Let's go to the 3-minute chart. I just favor a 3-minute chart. is what it is. So you had the 133 level at the open at 9:30. If a stock bounces into a key resistance level, let it get there. That's lesson number one. Don't get antsy thinking I want to short this move up. I don't think it can hold buyers above 133. Don't get short at 132.5. If it's strong off the open, allow it to get into your price level. And if you miss the trade, fine. Be willing to miss the trade to make the trade is one of my mantras. It gets right to 33, pulls right into obvious support at 131.50, and it's an easy short. You get a clean win. There was a reload for me off a lower high. There was more of a scalp trade than anything else, and that was it. You make that one trade on Google, Bob's your uncle. You can be pretty much happy with it. At least I was. It's a lot better than sort of fighting a stock at non-key prices. That's one thing a lot of people are going to do. 133 was a key level. You had lots of confluence going with it. It was underneath the previous close by about 30 cents or so. So there was a lot of reasons to look for that short there at the open on Google. Now, as I said earlier, had I looked at the Lucid chart, there is zero question this would have been my number one trade today. I didn't look at it, and that's a mistake. So I will completely concede. If there's two things that I have to go back and ask myself about. One of them is after the news in Lucid in the afternoon, why did I not just short Lucid when it failed 450 at the open? The second one, which I have to be accountable for, is we spent a very long time in the afternoon show yesterday talking about 40 on a firm, only to see it do this at the open on a firm at 40. So I missed this trade on a firm at 40. You can't catch every move at 9:30, but this or Lucid could have been the early ones that we had. When it came back into 40, take advantage of it. Had the 40 short the second time through. The best thing you can do, as I said, is to make the next trade there. So I just got the word from Fabian. We are locked and loaded, ready to go. You know who it is if you've been here before. We've got, I'm going to say it because I like to speak the truth. We've got the best market technician in the business. It's my first getting the chance to talk to Mr. Shannon live. So let's get right onto it. Absolute pleasure to have you here, Brian. And it's my first time getting to talk to you. I've read your work. I've heard others who I admire and respect in the trading business who talk very highly of you. I could go into a list of names, but I think it's pretty uncool to name drop. So we'll just drop your name in there. First off, how are you doing?
Doing well now, Neil. Thanks. And you know, I'm a fan of yours as well. We've got a confluence maybe of fan clubs here, to steal your word that you stole. So yeah, doing well.
I love it. I'm one of those, it's like, I love hearing really smart quips, and then I'll give credit once and then I'll steal it after that. But it's a lot of fun to do when you have a platform to do it. So this market is absolutely insane.
It sure is.
I mean, everybody, this is one of the best. This is a great bull run. There's no questions about it. And I think there's a couple of ideas that you were talking about. I saw you talking about on Twitter. But just in a general sense, before we get into like the nitty gritty and individual names, what is the best piece of advice? Because we get this question a lot. And I've actually asked Brian Noss about this. Mm-hmm. When you have a trending market or a bull market like this, and someone finds themselves, maybe they're not doing well when they're trading, despite the fact that it's pretty easy. It's a long side at times. But what's the one piece of advice? You have a lot of experience. What would you say to somebody if you're not doing well in the bull market? Is there one thing that they could maybe do? I get that question a lot. I'd love to hear your opinion about it.
Yeah, I think it's, just realize that you're never going to be right on all the time. Think to all the time, back in August, September, October, November, when maybe you were outperforming the market when everyone else was getting hit. And if you're underperforming a little bit here, it's more about consistency in any market cycle that we're in, not just how well do you do in this upward movement. Immediately when the market started rallying, I missed most of this first move, thinking, well, it's going to pull back a little bit. And then I slowly started to get involved, and that was a good thing. And I really kind of felt stupid there on December 1st when the market changed all at once. But then you've got to look at it and take each trade based on its own merits. Be careful not to get in that FOMO mindset and chase things and make these mistakes that can come back to haunt you. Now we're in a market now where there is no such mistake. There are no mistakes on the long side, it seems like, and this is the type of market where bad habits can develop. So just always maintain a level of consistency and focus on what you can focus on right there that day. Is do you have a process? Are you honoring it in a disciplined way?
Well, I love what you said there. This is a market that can form bad habits. A trader on this floor actually, I don't know if he coined the line, but he used to say something along the lines of the market is more than willing to reward you for breaking your rules. And the worst thing that can happen is if you make enough money doing that, then when it stops rewarding you for it, you're really going to get hurt. So it's like you could be, in this market, you could be averaging into some ridiculous pullbacks that maybe aren't at the prices you want to, and the market's going to pay you off for it. But when that reverses, you're going to get hurt really bad. So I love that point. But I want to get to some of your ideas here because one of which, and I think we'll get to that one last, I'm not surprised with, but I'm interested in your take here on Hive. And yeah, so I'll let you walk through it because when I was sort of looking through some of your ideas in your notes, this is one that's sort of like, oh, I'm going to sit back and I'm going to learn because I don't know that this is something I would have spotted as easily as you might have.
Sure. So Bitcoin and Ethereum and all the cryptos have had a huge run. And going into last week last week I got long some of this stock, I think right around this area right here, if I remember, 385, 390. And it was behaving well. I did take a third off initially, thank goodness. And pretty close to the high that day. I think it was $4.18, simply because it was daily R2. And then I held a 2/3 position. I actually suggested a stop right here at 398. I never set it, and I held the stock over the weekend. I was feeling pretty smart about that until Monday morning when it opened lower because, over the weekend, Bitcoin, I think, lost, 2,800 points or so. And I knew that was the risk coming into it, is that, maybe Bitcoin is going to lose some ground. I didn't think it would happen, though. So I was stuck with a 2/3 position as the stock opened much weaker. So when that happens, what I do is I look at the 5-minute time frame and I wait for the first 5 minutes. I wait for a low of that first 5 minutes to say, all right, if it breaks the low of the first 5 minutes, then I'm getting out of my swing trade, because what would have been my stop over here was already violated. Oftentimes the stock will, do something like this, but because this is basically a commodity related stock, Bitcoin being the commodity and the commodity was falling, it failed to do that. So I got out here for a loss, which, of course sucks and everybody hates that. But the news is, the good news is that I didn't continue to hold it down another 50 cents or whatever it is. So it's a good example that for a few things. One, I build it as it's a highly speculative name. It's holding above the anchored VWAP from that all-time high. We've got a sector movement going on, and here's a speculative little name that hasn't gone yet. A lot of people will tell you, we'll just stick with the leaders, and that probably would have been really good advice in this one when you look at, like how Coinbase held up. But I was kind of stuck in the mindset that I'm looking for new exposure, not to get onto a trend that's already this far stretched. So it all comes down to personal, preferences of what you trade, how you trade, but then coming down to risk management.
So for everyone out here and everyone watching in the chat, the reason we bring traders on that have different experience, better experience, different ideas, better ideas, is so you can learn something every single day. Because I'll tell you right now, I'm a day trader I've made over 20 years, I've made some swing trades. I'm not going to sit here and tell you I'm great. I've had good ones. I've had some bad ones as well. But looking at that setup, I 100% would have stopped out when it violated at the open, and I wouldn't have held to see that first 5 minutes. Now, what you just demonstrated is, yeah, look, when you're making a swing trade, it might only be an extra 10 cents on a 375 stock, but allowing it to maybe chop up some people that would do what I would do if I was swinging it and saw it violate that level, which is just get the heck out and move on to the next trade. If it had bounced from there, well, you've just shaken out weak hands. And as a day trader, I can relate to why that is a good idea. And sometimes it's worth giving that extra 10 cents. So, thank you for pointing that one out. You learn a lot I think you learn a lot from losing trades and how you sort of approach them, because I think that sets you up for, hey, if it would have held that open after violating the 75 level, it could have been absolutely off to the races and even a better win than it would have been, than it could have been before that. So thank you very much, Michael. I absolutely love that look. The next name you have in here, ISRG, I believe we're going to. Now this one I can, I don't know if you wanted to go there or to Nvidia, but intuitive, this one, I think you can intuit some of what you were looking at with this. I'm glad we started with Hive, but what's the look here on ISRG?
Well, so here's a 5-minute time frame, and let's just back it up for a moment, actually, to the daily time frame on the left, 30-minute time frame on the right. So I had actually gotten involved in this one on Monday, and today I brought it to the attention of Twitter. I'm not trying to front run a stock, obviously, with 1.5 million shares a day. I got out of a third of it yesterday. I purchased it at 311. I'm sorry, right as it got above this little peak right here. Sold my first third with a gain of $3 per share, and then my stop was going to be under here, which didn't get hit. So now midday or earlier today, it was at 315 and change, and I said, as it was getting back above the 1 and 2 day VWAP, I said, keep an eye on this one. So far it's trading an inside day. This was the range, and this is of course yesterday's range, so it was inside. But it got back above the 1 and 2 day volume weighted average price, and it was just up and away from there. So I'm liking it for the bigger picture, which it's breaking out of this. It held that rising 20-day moving average. It's making the higher high above the rising 5-day moving average yesterday, and that's where hopefully now I can continue to raise my stops up on this one, and this might be the case where I can hold it 3, 4, 5 days and see it make a really nice run.
So obviously, I mean, if you look at technicals, like that's your baby. That's why I think, like, I can look at that one and say I probably would have missed the trade, but at least after the fact, I think I'm going to be able to follow along with it. When it comes to holding for the bigger move, as you said, the bigger picture. Now I know you're going to follow anchored VWAP. I know you're going to look at some support and resistance, but I ask this of every single person I get to talk to that is a completely technical trader when they get into that hold phase. Is there ever anything in terms of the overall market, maybe individual news, an event in the sector? Is there something that can get you to adjust a trail or a profit take in something that has turned into a bigger hold? So you're past that initial move and you're kind of into the second phase of the move. Do you ever get off those technicals? And I ask this of almost every person I get to that looks at this kind of stuff on our trading floor, because it always makes me curious, because some people will say no, there's nothing else except for the technicals.
I like to sell breakouts. So in this case, a lot of people might be considering this a breakout right here as it gets past this point. So as it does that, and people who are looking to buy the so-called breakout, they're 10 points late to this breakout. So I take that into consideration when I'm looking at the shorter term time frame. And my goal is to hold it as long as the market tells me to. Breakouts often are a place where the market will turn a little bit. So I might sell some into that strength tomorrow morning, or if it gets there, or on half of my balance, I might set the stop as tight as right here and give the rest a little bit of room. In particular, we've got the Fed tomorrow talking about a macro event. Well, that could easily, this stock could easily do something like this tomorrow on the Fed. And I don't want to be stuck holding it all the way down to break even. So if I get out of a third here in the morning, or half of my original, and then it shakes out and continues to make those moves, higher highs and higher lows, then I might raise my final piece of my stop up under whatever the morning low is, just to give it still some breathing room. But knowing that my cost basis is 311, I'd feel pretty stupid giving away a $10 profit in the stock. So I try to use the definition of trend, higher highs and higher lows, and raise it up underneath those higher lows as it unfolds. But sometimes you've got to give it a little bit more room, for instance, down to the week to date volume weighted average price, which is this thick blue line. So those are some of the strategies I like to use, Neil.
Yeah, that's what I love to see. And I was talking about this exact same thing with a trader, that you can put any trader, experienced trader, profitable trader, whichever, I don't know, however you want to say it. Right. You can talk to any of those types of traders, and if you ask them about, like, put them on the spot about what their exit plan is for their position, and they can riff the entire thing off in detail. And if you couldn't do that, then you've got to ask yourself about that process. Like I knew you would. I know, of course, you have a plan there. I love that look, and you're right about the Fed. One last question before we get up to Nvidia.
Sure.
If that bigger shakeoff were to happen and you get a Fed bottom, I call it a Fed bottom whenever we have an interest rate day. But if you get a Fed bottom that coincides with the level that you like for an entry point anyways, would you try getting back in if it ends up holding tomorrow?
Not likely. I'm not that seat of the pants, and that's probably the wrong word, but I'm, let's say, not as skilled a day trader as you are. I need some time to let it set up, strategize, and see it unfold and anticipate what's going on, so that when it gets there, I don't rely on my emotions, because I know they're my enemy and they do get the best of me. So that's why I'm, not much of a day. I try not to be much of a day trader, because I am not as good at it as I used to be. My attention span isn't there. So I like to be a little bit more strategic and think it out a bit.
That's fair. I had to ask. Obviously, that's what we do. So I look for levels like that on the Fed day, because we're obviously going to be in and out faster. But everybody always wants to know about who.
Yeah.
The sexiest stock of the year. I mean, there's been plenty. I mean, it's not just Nvidia, but what's your take on this? Because we get more questions about specifically the Nvidia than anything else.
Yeah, so if people have been following my Twitter, I mean, I hate to be this guy, but I drew in exactly on this day right here, Neil, as it closed on that day. I drew a little sketch in that looked exactly like this and said basically that you want to buy it right here. And that's exactly what I did. So I'm long Nvidia with a stop under here. I'm going to try to pull that Twitter up, because I don't really, I wasn't, and I was very clear. I'm not trying to predict the market here, but it turned into be just almost a dead-on, picture-perfect outline of what would happen with this stock. So, oops, I've got that chat in the way. So this right here is Nvidia on the 7th. And I drew this line, this black line in to come up to the anchored VWAP from the peak of last month, prior to just after the earnings, and then the pull back down through the 5-day moving average. And this is what happened. We ran up to that 0.1, pulled back to this 0.2. Today we got above this anchored VWAP, which was from the low of, you can see right here in October. And now we're continuing to move higher. And this is what I think the stock is going to do. Now, going back again to what about the Fed tomorrow? That's the key thing, is how much of this do I want to protect into that type of move? So if we look at that 30-minute time frame, here again, this is where that green arrow was basically, or that green highlight saying, if it gets above there, to me, it's worth buying. I don't want to wait for that higher high, because it'll be extended there. So Nvidia, I think it's innocent until proven guilty. I am most likely not going to hold it below 467-ish for a swing trade. But if I get a nice cushion in front of the Fed tomorrow, then I'll try my best to hold it without hopefully getting out early on a quick spike and succumbing to the greed of the quick profit there.
Well, I don't have anything intelligent to add to a perfect trade that you more or less called exactly. You give us a nudge every now and then. I'm glad you put it on Twitter, which you don't always have to do, which I think is fantastic. We try to talk openly about setups and the why. But I will say this is my one piece of advice along those lines, is when you have a good call, or it's more like a good setup and an A+ and a good idea, make sure you put the trade on. It's especially when you're starting out. I talk about this with traders when they start. You've got to get something in there. If you're hesitant, just go min, like whatever it takes. You've got to take your A+ setups, and I'm glad you had that one. Best of luck, of course, tomorrow. It's a Fed day. Anything can happen, but when you got a winner in the bag going into it, it definitely feels a little bit better there. Brian, it's an absolute pleasure talking to you, Brian. Brian Shannon, CMT from Alpha Trends, the #1 market technician in the trading business. I've been doing it for 20 years, and everybody says exactly the same thing about you. So it's a pleasure talking to you.
Thank you, Neil.
Take care. Well, it doesn't get any better than that. I mean, come on, like we got a bull rally in markets, good trading day. I get to talk to Brian Shannon, who, let's be honest, when you read certain trading books, and he's got maybe a couple of the best ones that I've heard, like you actually read one good trade. And the praise that Brian gets in that is actually pretty spectacular as well. If you haven't read, that's also a good book. But anyways, let's get right into it. I know that whole thing where the time has run out on me always happens when I'm filling in for Sean. So apologies for that, but we're geeking out. We're getting good information from Brian. Now it's time to get into the roll call. You know what up. Starting with Bears versus Bulls. We don't say enough. You're the best moderator in there. And I'm opening with you today. Thank you so much for everything you do. What up there, TH? Give my regards to Kurt Angle. Okay, why not? Alex Davis, what up? Pauly D, you're not Pauly D. You're still D's to all of us. You know why. Sailor Moon, Andrew Chow, Darwin in the house here. We got Rich Naples, Tom Trades. They're all saying thank you to Brian. I'm saying thank you to all you. Dino Might, getting that last second. You're always spinning right before the stream's about to end, trying to catch that last win. I love it. I appreciate you. Jacob, Prania, we got Howell Capital, Mike Pena, Chef Joe in the house. You know what's up. Trader Forever, Roadblock. No roadblocks in this market to the upside. That's for damn sure. Nick Dubs. We got John Von Sowers in the chat. That just sounds like, let's be real, like you got some money. When you get one of those Baron type names, I like it there, Mr. Von Sowers. Your Huckleberry. I'm a big fan. Doc Holliday, the greatest character in TV history. Bonkzilla, Professor Love, Lolo, Roland Joe, Ama Hamada, Elon, Trade Trigger, everybody in here. D-Hole Cuts, not bad. TH, Dynamite, that's twice for you, but I love it so much. Dynamite. API, shout out to you. Royal Dixon as well. Howell Capital, we got you. Juan Padilla also getting a last spin in. Good luck with that. Shout out to everybody that had fun the last couple of days. We're in a bull market. Remember, tomorrow is the Fed. So we have a plan of action for the Fed. We're going to go over it. Sean's going to be back. We'll wax poetic over the same plan we put on for a Fed day every single day, which is be patient, trade the best setups, trade the key prices. Shout out to everyone in TraderTV Live universe, and thank you to the entire team. Thank you to Obi for filling in for Sean last couple of days. We're going to see you bright and early, 8:30 tomorrow morning on a Fed day. Let the bull run continue. Bye, guys.